that there's no hope? Are there issues and problems in your life that you want to break away from and feel like you can't? Do you wonder, how can I be free from these issues that have destroyed my life? Well, my friend, I have the answer. Bible Way Hibner Memorial Church of God in Christ presents Chain Breakers, this and every Sunday at 9 a.m. here on WHYL.
From the L.B. Smith Ford Lincoln Studios, Oldies 102.9 is WHYL Carlisle.
Welcome to the Real Estate Radio Guys, your weekly source for all things real estate. We're your hosts, real estate broker John Rainville and your mortgage expert Kingsley Harmer discuss everything from mortgage rates to home staging for foreclosures and everything in between that affect the daily real estate market. Real people, real questions, real answers. Today's show is brought to you by www.pagoloan.com, your source for new mortgage loans. NMLS number 1018. EnviroQuest, trusted for home inspections and radon mitigation in Central PA for over 25 years. And brokersrealty.com, the easiest way to search for real estate in your hometown. Now, on to the show.
That was my car this morning.
Well, good morning, everybody. It's a frosty day in PA today. You know, Kingsley, on the way in this morning, I'm pretty sure I saw a woolly mammoth.
I wouldn't doubt it. I mean, I think maybe it got confused as far as, you know, being up in Antarctica or parts of Canada.
Dude, it's cold, so cold, it's freezing. Well, I'm John Rainville from brokersrealty.com, a Pennsylvania, Maryland, and New York real estate broker. And my co-host here is Kingsley. Kingsley?
With pagoloan.com. Loans up to 100%, zero down, VA loans, USDA loans, and our brand new true one-time close construction loan. Good morning. Today we're covering
real estate lingo, jargon. You know, so a lot of our listeners, I know, over the last, months, a lot of times don't know what the realtor is talking about or what the loan officer is talking about, because we talk in our own little language every day. So that's going to be our topic today.
We don't realize that we're doing it.
Correct. And our buddy, our favorite home inspector, John Staz from EnviroQuest, is going to be on the show later on. And John's going to be talking about a very appropriate topic this morning, freezing pipes.
Definitely appropriate. Yeah. I've seen some Facebook feeds of issues with freezing pipes over the last few days.
Oh, yeah. I know. Our property managers were dealing with one where actually the water meter was outside of the house and it actually exploded.
Really?
Good news was all the water was running outside the house.
That's great news. And I'm assuming since it was the meter that it was the responsibility of the water company?
I didn't hear the way that ended out, but I would assume so.
I would hope so. It's not something you hear likely that it explodes in cold weather. I mean, what causes that?
Well, because it froze inside, I guess, and broke it.
Yeah, but what it's supposed to be electronic now, aren't they?
No, you still got to run the water through the meter.
Oh, see, now when they came out to my house, they came out and they just put this little electronic box outside the house with the meter inside the house.
This isn't out where we live. This is up north.
Oh, okay. So they haven't, come into the 19th century yet. Gotcha. Just like the electric meters.
No, they still have horses and buggies just like Lancaster County.
Nice.
So, folks, we're going to be talking today about real estate, the jargon, the lingo, so that everyone gets a little bit better handle on it. So, for example, real estate. What's real estate? Well, real estate is land and everything that's permanently attached to it. Right?
Yeah, but I don't consider that jargon.
No, but sometimes people consider a mobile home and a park real estate, and
the park's real estate.
Park's real estate, right? But they do still get real estate taxes, which confuses.
They do, yeah, they do now, don't they?
Right.
Used to be that they didn't for many years, especially down, I think, in parts of like Philadelphia County and Bucks counties.
Right.
And they finally just switched all that over. Not to go off topic or anything.
But some of the terms that we use every day pretty much in our industry, one is a short sale. Kingsley, can you tell them what a short sale is?
The long and skinny of it is the bank and or lien holder on a property will accept less than what is actually owed. And usually that has been pretty common over the last 10 years, although it seems to be finally dwindling down. With the market values that have dropped, it was very common, especially in 2008, 2009. It ran rampant in states like California, Michigan, and Florida, where all of a sudden your house was only worth $100,000, but you owed $150,000 on your mortgage still. A lot of people felt the effects of the market going up and taking out cash, and when it crashed, you're upside down is what they call it, or underwater. And the mortgage company, after several years, after 2007, finally came to the conclusion that it was better off accepting a short sale as opposed to all of the costs that were involved with actually going through a foreclosure. So somebody, a real estate agent, or people that are designated to negotiate with the mortgage company would, put together a compilation of comps and what the actual values of the home were and the condition of the property. And the bank would come back and say, okay, look, I know you owe $150,000, but based on the scenario, if somebody comes in and pays you $100,000 today, we'll accept that value.
Right. So it's almost like a foreclosure, except a lot of times the home owner at that point is still living in the property, but they need to get what we would call third-party approval. So the seller may accept the offer, but it's not a completed sale until the bank or the lender actually signs off, correct?
Correct.
All right. So, we do see some things like that out there right now. There's still some out there.
There are still some, actually, and I'm, I believe, about to go through one.
You're not going to go through one.
Well, no. I help a client through one, which actually I guess I'm in the middle of two at this point. They're just ugly transactions, and 3 years ago it wasn't so much of an issue, and now all of a sudden, banks, even in the foreclosure status or HUD homes, as you probably have seen, are just starting to ask for market value, even though it's obvious that it's not in that condition of market value.
So now that we've totally jumped ahead, why don't we start sort of at the top of where we were? We'll go from A to Z. How about that, guys?
A to Z? I like A to Z.
A to Z. A to Z.
You want to? Okay.
How about an appraisal? Right. What's an appraisal? We're over prepared today.
We are over prepared. Why don't we start with APR?
Well, no, that's an acronym.
Oh, well, so what?
Okay, so an appraisal is where someone comes out and an appraiser who's licensed by the state and who's taken a lot of education, and actually, if they're a newer appraiser, they've actually even done an apprenticeship for a number of years, depending on how many appraisals they can get done under their belt.
And we had a show on with an appraiser.
We did. And
go back and catch our podcast on TuneIn,
Spreaker
and
iHeart.
Spreaker and iHeart.
But it's where they're sort of verifying the price or the value that the property was sold at for the bank. And
it's always a moving line.
Yeah.
In today's day and age, or today's market especially, 6 months ago you may have had an issue getting a value, and all of a sudden homes start selling and creeping up. That's where you get your appreciation.
Yeah, that was the next word, appreciation. Yeah, that's what people want to know. How much is their home going to appreciate? And it's just like getting interest on your house. Yeah, good segue. Right? And then a buyer's market.
Oh, you don't want to touch a little bit more on appreciation?
Well, go ahead.
Well, what's the national average for appreciation? And this was important because we keep telling people that buying a home is a great investment. So aside from all of the tax implications and /savings now that are, maybe in jeopardy or changing a little bit.
Well, for last year, I think we saw a national average around 7.3% appreciation. Here in Pennsylvania, we were a little over 3%, and it's projected to be 4.5% for this year.
Really?
Yeah.
In PA?
MPA, 4.5%.
Wow. So what that basically means is you're paying for your living expenses month after month, and without having to do anything, you're making 4% this year on your money. on your investment.
Right. So if you have a $200,000 house, theoretically,
at
the end of the year, it should be worth about $209.
Right.
Based on projections.
Right. That's great. I mean, you don't have to do anything.
Right.
So you're actually getting your money back because you're putting money into your house.
Right. And it's one of the great reasons for home ownership, because in a normal market, we're appreciating while they're paying down the mortgage. So they're increasing their spread and constantly having more equity. And it still is the number one way to build wealth in America.
Oh, yeah. Well, and what most people don't think, especially, younger millennials, I guess, people in their 20s and 30s, if you buy a house today, now, without saying you're going to move or do anything to that effect, you're going to pay for a mortgage for, let's say, 30 years. So your $200,000 house, you're paying in for 30 years. So at the end of the time frame, I guess, or the term, you're actually getting your $200,000 with that appreciation over 30 years back, as opposed to renting. You're giving it to a landlord.
Correct.
All that money.
Either way, you're paying a mortgage.
Right. So at least you're getting something back at the end of 30 years or 20 years or however long you're paying for it, along with appreciation, which is the same as, let's say, putting money into a mutual fund over 30 years. That money compounds because you're appreciating over last year's numbers. So, okay.
Okay, so condominiums. Oh, you want to go to buyer's market?
Well, yeah. I mean,
I'm just trying to jump you ahead.
I'm going to say buyer's market is not what we're in right now. It is definitely a seller's market. But, 3-4 years ago, we were in a buyer's market. And what that basically means is somebody looking to buy a home has a leg up on the negotiation process in buying a home because homes were not moving off of the market very fast. And a seller who would be selling their house, would be stuck with a house, might be sitting on the market, as we know, at that time. And we're just checking the sound here, folks.
Yeah, because on Facebook they're saying that we have no sound.
Yeah, we're up and running here. So, actually, we don't.
Okay, well, buyer's market is, that the buyers are in control because they're the ones that are driving the market. Condominium is a property. A lot of people consider them to be like a flat or like an apartment. Excuse me. And on a condominium, you only own really from the paint in on the unit.
You all right there, Chief?
No, yeah, I'm back.
All right. Yes, from the paint in, basically the interior walls, if you will, of the property, of which in most condominiums or developments, they also have a common area that is usually associated with condominiums, where the owners of the condominiums actually have part ownership in these common areas. And depending on the condo associations that you run into, for example, California, Hollywood Hills, you have these high-rise condos that have amenities like parking, pools, pool houses, game rooms, and several of them that you spend like $350 a month on would even have valet parking type services in these condominiums, and that would be considered a common area.
But you don't appreciate off that payment.
No. And since we're on the appreciation too, we'll tie it together. Condos and then possibly townhomes appreciate less than your traditional single family.
Right. It pretty much goes condominium appreciates the least, then a townhouse, then a semi-detached home, and then a single-family home for appreciation. Those will typically, that's how it goes. What's a contingency? A contingency is when someone has put something into a contract that if it doesn't occur, it can actually void the contract. Common contingencies in contracts are things like financing. So if you don't get the mortgage, obviously you don't have to go through with buying the house. Or if it doesn't appraise for the value, it's another common contingency. Sometimes people have contingencies in there for a home inspection, or checking the insurance or the zoning as a contingency. So,
and another common one as well that a lot of people, I think, are a little hesitant on is they have to sell their home before they can settle on the other home because they need the equity out of there. So settling on the new home that they're trying to buy when they put an offer in will be contingent upon their selling. And I know back in the early days, that was, I think, a whole lot more common than it is today. I think people are a little bit more afraid to accept the contract with a contingency of previous house selling because it'll hold up their home selling as fast as this market is right now.
That brings us to conventional loans. And a conventional loan is typically one where the buyer is putting at least 20% down, but not all the times. Kingsley, can you sort of explain how those low and no down conventional loans work?
Well, a conventional loan is merely driven by the market and the investors in general. They're not guaranteed by government in any way. So
that's a better clarification there.
Correct.
They're really loans that are not guaranteed by the government.
Correct.
Okay.
Yeah, and a conventional loan, could house anything from commercial, theoretically, right, to a standard loan issued by Fannie Mae that you don't have to go according to, let's say, FHA guidelines, VA guidelines, etc. So a conventional loan, it really does house a lot of different programs. Alt-A was technically considered conventional because it was funded by somebody other than the government, or guaranteed by the government for that matter. So your Alt-A programs, which everybody hates the term Alt-A and subprime these days, but, that market will come back, and it is funded by Wall Street in essence. It's funded by the people that put money in to do that.
A lot of times when you're in the real estate process, you'll make an offer on a home. That's where you've put a written offer together with your real estate agent, and they've had it presented to the seller. The seller at that point in time makes a counter offer, and that's the next thing we want to talk about. A counter offer is any time that there's a change in that negotiation or in the contract. So, for example, you make an offer, and the seller is offering the house up for $100,000, and you offer $90,000, and they counteroffer you at $95,000. When that offer comes back to you, you have three options. You can either accept that offer as they wrote it, you can reject it and not have to go forward with the contract, or you may counter them again. You never obligated to take the counter. You could counter them back and say, no, we'll go $94,000, and see if they will accept it at that point in time.
What happens if I don't do anything?
Well, it drops dead. It's a dead issue. It's not you don't have no contract till there's a meeting of the minds.
And in that contract, is there something that says if you don't sign by a specific time?
Usually there's a time frame. Yes.
So at that time frame, it would be dead. So it's open until that time frame.
Unless one party or the other says it's dead.
Okay. So if I sign it after that time frame legally, it's a dead contract.
If the other party wants to enforce that, yes, that's correct.
Okay.
That's correct. But we do see sometimes where that happens.
Well, and today, the thing was 3 years ago, people were putting in all these lowball offers, and investors just, in particular. And then it started getting to the point where you look at the contract and kind of toss it in the trash, and in your mind it's a dead deal. You're not even going to dignify them with an answer.
Yeah, it's like when everyone thought if it was a government-owned home, they could buy it for $1. Oh, I'll buy that one.
And there was a time you could.
in certain places.
Yeah.
Yeah. That brings us up to a deed. Indeed. A deed is actually what transfers ownership. Okay, so it's sort of like a title on a car. And a lot of times you will go to settlement, closing, and the seller is obligated to sign the deed. At that point in time, that's technically when the property transfers to the new owner, when that has been executed. But a lot of people think because they get that in the mail like 6 or 8 weeks later, they guard it like it's gold. And anymore, your deed is actually recorded in the local courthouse, and you never need to actually bring the actual real deed to sell the property. You can actually, because you'll do a new deed with the new buyer's information on it at the time that you would sell it.
So why would somebody looking to buy your house want a copy of the deed?
Oh, well, they may want to know that you're the owner if you're trying to sell it, proof of ownership. And a lot of times in a deed, but not necessarily, there are other factors that have been written into the deed. For example, that I have a life estate in the deed, and that's where I get to live there at the house until I die. Okay, and there's a whole bunch of those. But you could also have deed restrictions that says, for example, a common deed restriction in a new home community would say you're not allowed to raise any chickens, any goats, any pigs on the property, okay, because they don't want that in the neighborhood. Probably over where you live right now, that's probably a deed restriction.
I would imagine so, yeah.
Okay.
Definitely no goats.
Right. But there are other things that can impact the deed, and we'll get to that later on. But that's really it. It shows proof of ownership, and it does transfer ownership with that deed. Next thing, depreciation.
Opposite of appreciation.
Yep, that means we're going down, and which is what we saw after 2006.
This is actually a good topic because you can be affected, depreciation you can be affected by without your control, number one. And a lot of times there's really nothing you can do to fix it. A lot of times.
Correct. And depreciation is also used in a tax sense for like an investment property. You're allowed to depreciate it, drop the value of it, and write money off of your taxes every year for 27 and a half years, I believe, on an income property.
Which I think just changed.
Did that just change?
I think that just changed.
Okay. And but there
More
is recapture then when you do sell it, and that's why we do the 1031 exchanges. We've had shows on.
But just to give some examples, when you purchase a property, a lot of these things can affect, number one, the sales price and your negotiations. So let's just say, for example, you had a neighbor next door, and a lot of us, I'm sure, have had that neighbor where the yard or the house is run down or it's been vacant. For a few years there, a lot of these vacant homes were keeping values down in neighborhoods because of these eyesores that weren't touched. The grass is, 10 feet high. Nobody wants to live next to that. You've got mice issues, bug issues, the whole 9 yards. That can depreciate your property.
Right. Conversely, if you have the neighbor like I have a great neighbor next to us who's actually like the best gardener, lawn person I've ever seen in my life. And their house next door to mine has the average look to it. Theirs is like house beautiful gardening.
Well, isn't this the competition you had because they had the lines and everything were like
right.
perfectly mowed into the grass?
I'm just looking for Eric and Kim to keep bringing the value of my house up because he does such a wonderful job. And I want to give somebody something to aspire to when we do sell our house, that they can make their house
very
as
nice.
beautiful as Eric's.
Very nice. So what else can depreciate a property?
Well, condition. Condition is probably the number one. Housekeeping,
no maintenance.
Condition. Yeah, deferred maintenance.
Crime.
An obsolete design. So sometimes you see in older homes where you have to walk through a bedroom to get into another bedroom. So that means technically on a government loan, that one bedroom doesn't count as a bedroom because there's a privacy issue.
What about updating? I mean, how about that beautiful mustard yellow carpet that everyone used to have?
I think it's coming back. Shag carpet's coming back.
Yeah.
That's something that yes, could also bring the value down.
Okay.
A lot of times the realtor will tell you, that there's a seller's property disclosure. Disclosures are where the seller is telling you everything that they technically know about the house from reasonable, knowledge. For example, if they put an addition on, if they had the roof replaced, if they had a plumbing leak, things like that. On the other side, a buyer may make some disclosures as far as their financing. Right, they're going to disclose. They're going to have a pre-approval, maybe, and
I would think 99.9% of the time they're going to have a pre-approval.
Pre-approval. So that's disclosing that they apparently have the financing capability to be able to go forward and get the mortgage and close on it. So that would be an example of a disclosure. Disclosure is where you're telling one party's telling the other everything that they know at that point in time. From reasonable.
And there is a seller's disclosure that is usually signed.
There is.
And that's more or less, I think, at this point, a CYA.
And there's a word that wasn't on our list, which is closings. So in a lot of states.
Not the CYA?
No, in a lot of areas, that's called escrow. You make escrow for when you're going to close. But closing is actually when we consider it here locally, that's when we're going to go to settlement. And at settlement, that's when you pay the seller for the property and they transfer the deed. In some states, that you go to closing, or what they call close of escrow.
Escrow.
And you actually don't get possession of the property for another 30 days. So, there's some differences, across the nation.
And they're becoming few and far between.
So that's where it's important to do your due diligence.
Now, let's go back to disclosure for a minute. Because what's interesting about disclosure, you have the seller's disclosures. Because this wasn't brought up in A either, an as-is property, right? So many people believe as-is you're buying it as is. The way you see it is the way you're getting it, right?
Correct.
So you still get a disclosure a lot of times, unless it was a property that was handed down through probate, etc., right? Or a HUD home, something to that effect. But let's just say, for example, you've got disclosures on there and you missed something. What changes, or what is the one thing that protects you from as is and not being in trouble as a seller?
Are you going to tell them?
Well, sure, but I'm okay. Testing your knowledge.
No, go ahead. I'll let you steal the
Stumped
thunder.
you, didn't I?
Yeah.
The obvious, right? The obvious wear or tear, obvious issues on a house. If you walk in and you see that a pipe's been busted and it's right in front of your eyeballs, that protects you from the as is and or seller's disclosure forms. So keep your eyes open as a buyer. Because
when you're doing your due diligence.
Correct.
And due diligence is when you're doing all your inspections and things like that.
Correct.
To check out the property. If you're buying a commercial property, maybe you're checking their books. Maybe you're buying a business. You're checking the zoning. You're checking that the property is insurable. Those are things that would fall under due diligence. We touched on escrow. Escrow agent around here, we call it title work or a settlement company. That's the person that's actually going to do the closing. And they actually technically represent the bank, the lender. Right? They're supposed to be protecting because they give it.
They're supposed to be protecting both, which is why they issue title insurance for the lender and the buyer. So their idea is that they're protecting. And see, the way I look at it, they're looking at protecting the buyer because they want to make sure that title is clear, free and clear when it's being given to you as the buyer.
Okay.
So that's always the way I've seen it. Now, the lender, obviously, they're getting their money. So at the end of the day, they're getting their money, the original, they're getting their payoffs, the sellers, etc. The new lenders coming in, and I would probably say 70% of the time, only title insurance is issued for protecting the lender. So that's usually, the higher end stake because they're the ones writing the check. So yes, the title insurance itself is protecting the lender, but I think as a buyer coming into a title agent, because you most of the time get to choose, they have got to be looking out for you to get a title free and clear. Now, by default, by protecting the lender, I think most of the time they're getting that anyway.
Another thing then is that we have it down as escrow instructions or the closing instructions. That's what's given to the title company, people that are going to close. And there are typical things around here. You need to bring, photo ID. You need to bring, if you're the buyer, you need to bring your funds as a certified check or have it wired in because they need to know that that money's good. Those are some typical closing instructions they have. Maybe a part of the loan commitment says that at settlement, they have to have proof that you paid off your MasterCard bill, and that might be something that you bring to closing so that all the paperwork's correct.
That is correct.
So that's closing, and we can skip that next one. Should we go on to acronyms?
Actually, we're going at the bottom of the hour. I think we got to pay some bills here, so we'll probably have to run some commercials. So I think when we come back, we'll move on to mortgages.
Sounds good to me.
The Real Estate Radio Guys with John Rainville and Kingsley Harmer. We'll be right back. Bring in the new year with brokersrealty.com and a new home, plus a free vacation getaway for two. Simply as our thanks for doing business with us in 2018. Our realtors use state-of-the-art tools, techniques, and training to help you sell your old home, all while helping you buy a new home, vacation home, investment property, or commercial building. Google brokersrealty.com or text vacation to 79564 for more info and start the new year with a, bang. That's vacation to 79564.
Are you working with a mortgage company that offers pre-approvals or just pre-qualifications? Does your mortgage company reward police, firefighters, military, teachers, and nurses with better rates and fees? How would you like to apply and be updated on the status of your loan right from your phone? Introducing GSF Mortgage Corporation, where technology and relationships make the difference. Visit pagoloan.com to apply or call 717-200-4800 for more information. NMLS number 1018.
Buying or selling a home? For professional home inspection, call EnviroQuest of Harrisburg. Their certified home inspectors will conduct a thorough inspection and provide a detailed report with many pictures. They'll explain the findings. Do you have elevated radon levels in your house? Call EnviroQuest. They have fixed over 10,000 homes over the last 25 years. For a professional home inspection or radon mitigation, call EnviroQuest at 233-6144, 233-6144, or visit EnviroQuest online at evqharrisburg.com. That's evqharrisburg.com.
Bring in the new year with brokersrealty.com and a new home, plus a free vacation getaway for two. Simply as our thanks for doing business with us in 2018. Our realtors use state-of-the-art tools, techniques, and training to help you sell your old home, all while helping you buy a new home, vacation home, investment property, or commercial building. Google brokersrealty.com or text vacation to 79564 for more info and start the new year with a, bang. That's vacation to 79564.
Everyone wants to buy, sell, or invest in real estate. If only they knew the best way to do it. Hi, I'm John Rainville.
And I'm Kingsley Harmer.
And we're the Real Estate Radio Guys. We bring over 40 years experience to talk about all things real estate.
Weekly, we'll discuss the latest trends, hot topics, along with tips and techniques that could save you thousands and eliminate headaches.
So tune in to the Real Estate Radio Guys, Saturdays at 8 a.m. here on WHYL 102.9. Real topics, real answers for real people.
Are you working with a mortgage company that offers pre-approvals or just pre-qualifications? Does your mortgage company reward police, firefighters, military, teachers, and nurses with better rates and fees? How would you like to apply and be updated on the status of your loan right from your phone? Introducing GSF Mortgage Corporation, where technology and relationships make the difference. Visit pagoloan.com to apply or call 717-200-4800 for more information. NMLS number 1018.
Back to the show, the Real Estate Radio Guys with John Rainville and Kingsley Harmer.
So with that wonderful commercial, it gives me a perfect segue into fixed rate mortgages.
Yeah.
And since we missed the other type mortgages, I'll just burn through them real quick. You've got a fixed rate mortgage, which basically means When you lock in your rate and you sign your paperwork for that mortgage, that payment and that interest rate are fixed for the life of the loan, whether it's 5 years, 10 years, 30 years. A lot of times you've got escrow payments that are involved with your mortgage as well, and that includes your taxes and homeowners insurance and mortgage insurance. And sometimes your payment can change because of your escrow, because as you know and I know, your taxes unfortunately go up every single year, it seems. Some years more than others. With that being said, mortgage insurance is insurance that protects the lender against you not paying your mortgage, which unfortunately now is pretty much mandatory on all FHA loans. And there's mortgage insurance on conventional loans where you do put less than 20% down. One type of mortgage that's not readily available or not widely used anymore is what's considered an adjustable rate mortgage. Investors a lot of times will use them. People that are maybe in jobs where they know they're going to move in 3 or 4 years can get a rate that's only fixed for, let's say, 3, 5, 7, or 10, which are the most common. And a lot of times, depending on the market, that rate can be slightly lower, which would, give you a lower payment for that specific period of time. Of course, there is the risk that after that fixed amount of time, your rate can certainly adjust according to different indices.
And that brings us up to hazard insurance. A lot of times people call it fire insurance or their homeowner's insurance policy. And that's what covers your property for things like
Zombie apocalypse.
That's correct. If it burns down.
Elsa.
Maybe if you have a plumbing leak in the house. Some policies, if you remember our show with Miller & Miller, like if you have a sewer backup, you can get coverage for that. Mm-hmm. There's all sorts of different coverages that you can add into your homeowner's insurance policy. It is required for almost every mortgage. What is it required for every mortgage, isn't it, Kingsley?
It is.
Okay, because that protects the lender and you, in case something happens. But it is different. While we're on that topic about the zombie apocalypse, it doesn't protect your dishwasher if it breaks. That's actually a home warranty, which you can buy through most real estate agents, have those available.
But does it protect against a dishwasher that and you ended up with a water leak throughout your kitchen and maybe into your basement?
Two different things. The home warranty would cover the dishwasher, but the water leak would be on your homeowner's insurance policy.
Okay. So you actually maybe have two.
Right. You may have a double claim. When in doubt, always call your homeowner's insurance agent.
And it's better to have one on hand. So, quick shout out to Miller & Miller, who are on our show. Have an agent, somebody you can call with questions. Okay.
Well,
we did the closing. Right?
Yep. And so now we're up to pre-approved and pre-qualified. If you can explain what that means to our listeners.
Okay, so everybody says they need to be pre-qualified to buy a mortgage. A lot of realtors are going to require you to be pre-qualified before they'll even take the time out, spend their money, resources, gas, etc., to show you homes. So the first thing you want to do, and the very first step in any transaction of when you're thinking about buying a home, is to get pre-qualified, pre-approved. Our company will do pre-qualifications on a limited basis. Most of the time we want to do a pre-approval, and here's the difference. Pre-qualified is a very short look at your particular picture, your income, the assets that you have, and of course your credit. A lot of times there's a gray area on maybe your debt-to-income ratio, maybe you've got questions because of your job history, or maybe you don't have a lot of assets in the bank for reserves and your credit scores are not that great. So pre-approval is the next step up, where you actually take your documents, and as opposed to just a loan officer reviewing your documents and your file, you have an actual underwriter review it. So when they give you the stamp of approval, you're literally approved. And at that particular point in time, you go under contract. You know that the only thing at that point that's going to really be an issue for you is the house itself, which also has to be underwritten. So what we do at GSF is actually give those that get pre-approved, they submit the documents, we go through underwriting, an incentive that says, look, get pre-approved, submit your documents. As long as you write an offer within 30 days, we'll actually pay for your appraisal, up to $650, which is a nice savings out of your pocket. So there's a difference between pre-qualified and pre-approval.
Prepayment penalty. we don't mainly see that. I see those more on the commercial side. I mean,
hard money.
Yeah, and a prepayment penalty, folks, is if you pay the loan off early, that they're going to charge you a fee for that because they're not going to make as much interest then off of you. And it does, just like Kingsley said, hard money tends to be at a higher interest rate than what the street rate is. So they want to know that they've got sort of a guaranteed return when they do that loan. Kingsley, can you explain what points are?
A point is equal to 1% of the loan amount. And what does that mean? Well, let's just say, for example, your loan amount is $100,000. 1 point would be equal to $1,000. And a point, oftentimes you'll hear, is used to buy a rate down. So the market issues particular rates, and there's always a rate sheet as far as what they call it. So when you call up and say, hey, what's my rate? And we say, oh, well, your rate's 4.25%. You don't have to take 4.25%. There's options to buy that interest rate down. So even as the market goes up, let's say, for example, you want 3.5%, but the cost to get 3.5% is 1.5 points, you would pay $1,500 of what they consider prepaid interest to buy that rate to 3.5%. Now, what does that mean for you? You paid $1,500 for that 3.5% rate, but now your interest is 3.5% throughout the life of your loan,
which could end up saving you thousands of dollars.
It saves you quite a bit as long as the time in that particular property or with that loan is usually over 5 to 7 years.
Okay, the next thing, I just want to get through a couple of these before we bring Mr. Staz on here in a second. The difference between a real estate agent and a real estate broker. A real estate agent here in the state of Pennsylvania has taken 2 classes, sat for the state exam, got their test, got the blessing from the states that they're now allowed to go out and sell real estate as long as they work for a broker. A broker is someone who is qualified by the state in order to supervise those agents. That means that they've done here in Pennsylvania, they've been in the business usually at least 3 years. They've done a certain number of transactions, and they've taken about another 300 hours of classes in order to get to that, and then they've passed another exam. Okay, so whenever you list a property, you're actually listing it with the broker, not necessarily that agent. So if you list with XYZ Realty, the broker of XYZ Realty is really who you're hiring. You're not technically hiring that agent, even though that agent is in essence like a minion that is doing all the nitty-gritty day-to-day work. And
so basically experience, time, education, and the ability to pass the test.
Correct. Now, in some states, for example, I think it's Colorado, Washington State, everybody's a broker. Okay, but it's not that way here.
Really?
No. Yep. Huh. Staging.
We actually had Sue Kaufman on a few months ago at this point, and she is a staging expert that comes into a home and tells you, based on her experience, expertise, and schooling and knowledge, what it's going to take to get your home sold faster and for more money. A lot of times staging will be utilized in a home that's vacant, new builds, or maybe a home that just needs some sort of polishing.
Some TLC, some puff and fluff. Under contract, when somebody says something, then he says that the home is under contract, or a lot of times here we'll say pending, and somebody that's calling us, to ask about the property doesn't know what that means. That means that the seller has accepted an offer, and they're trying now to remove those contingencies we spoke about earlier. The appraisal contingency, the financing contingency, the home inspection contingency. That brings us to our last word for the day, which
My
is
favorite. Zero down. I love it. So zero down means literally zero down. If your purchase price is $100,000, your down payment is zero. No money, nothing.
But it still may cost you some money to get in the house. You may have some
you still have closing costs,
which we skipped in the C's.
We did skip the C's. Closing costs is obviously it was built in throughout. You've got your title insurance. You've got taxes, which was another, which we all hate. Homeowners insurance, hazard insurance, homeowners association dues, all of those things that you have to pay in order to get into a home as a closing cost, which over many of our other episodes we've talked about strategies and whatnot to bring those down. You've got lender credits, you've got seller credits, the whole 9 yards. So with a zero down loan, a lot of times you still need money, but it's significantly less than it used to be.
Well, that brings us up to F. Freezing pipes. Good morning, John. How are you doing?
Good morning. Good. You guys staying warm?
We are trying to stay warm.
Trying. My car did not like the cold this morning. How about
we
you?
have some trucks that kind of hard to start when it gets this cold. We have the block heaters on them. So.
Nice. Yeah, I never... I mean, I have a diesel truck, but I never put the block heater on, and I think the last time I tried to start it in 10-degree weather, it did not like me.
No.
Yeah, either the block heater or some real good batteries. So the anti-gel stuff helps too.
So perfect topic today, John, freezing pipes.
Yeah, a lot of people are becoming experts on this in the last week or so. But, so the biggest thing I'd like to do is just give people some tips to help them if they have this situation. A lot of times the freezing pipe dilemma affects older buildings because there's less insulation. And one of the things that you get is you have more infiltration and exfiltration of outside air coming through the walls, like lower R values. So as painful as it is, one of the biggest things you can do to prevent this from happening is turn your heat up to higher than, let's say you keep it at 68, turn it up to 75 or something like that, or 73. And, that's going to, the increased heat in your house is going to keep the walls warmer in places where it might not get as much warm air. Going to start getting them. Just that heat's going to penetrate into the walls and keep things a little warmer than they would normally be. Another thing is if you have like vulnerable areas where you think that you have your pipes are going to freeze, or they have in the past, is just run a trickle of water. The movement of the water through the pipe will sometimes be enough to help keep it from freezing.
So basically maybe turn the faucet on the upstairs to on, so all the pipes going from, let's say, maybe the basement all the way up to the second floor, there's movement of water in those pipes.
Yeah, movement of water in the pipes. Another thing that we do, having some rental properties, if we ever do have a situation where the pipes freeze, we get them thawed out, we always replace them with PEX, the plastic piping, because that way they'll still freeze, but they're not as vulnerable to bursting.
Now, from my understanding, PEX has the ability to expand and contrast and still remain intact, correct?
Correct. Yeah, so it's still the nuisance of not having the water flow, but you're not going to have a burst pipe or the risk of flooding or replacing that pipe in most cases. So
John, if somebody has their pipes are frozen this morning, so should they just go out to the garage, get a blowtorch, and crank it on that pipe? Well, I guess not if it's PEX.
Yeah, one thing, here's some other tips. If you do, a lot of times the pipes that freeze are on an outside wall. So, let's say your pipes run through a crawl space and go up an outside wall. Another thing that works pretty effectively is the heat tape. Wrap the pipes in the heat tape, especially with copper pipes. The heat will transfer through the metal and help keep them unfrozen sometimes. Something as simple as if you have cabinets in your kitchen, open the cabinet doors so the heat that's in your house can penetrate maybe back into the cabinet to those outside walls. If you have a crawl space, crank up the heat in your basement, open the crawl space entrance so the heat from your home can get into the remote areas.
So what about manufactured homes? I mean, that's a big thing these days because a lot of the pipes are running underneath the manufactured homes. And even if there is skirting, et cetera, on these homes, in frigid temperatures like this morning, what was it, like 3 degrees? What can you do to, keep your pipes from freezing or bursting, et cetera, in this type of condition?
Yeah, so the two factors are, like, as we all know, the freezing temperatures, but also the airflow. So you see a lot of times with that skirting, if you replace it with a solid skirting, such as they'll use vinyl siding, and, that'll help to reduce the airflow. Sometimes even if you can put some insulation on that, because you're going to find, the ground is actually going to give off a little heat. It's usually around 50 degrees as you go down into it. But if you can stop the airflow and then you have a little bit of heat coming off that ground, then, under a manufactured home or a mobile home, that can sometimes be enough. Once again, you see a lot of heat tape in use in those as well.
Now, does the have you ever seen the foam where you actually wrap the pipes in the foam? Does that actually help at all?
Yeah, that should help. That does help. Yeah, the insulation on the pipes helps as well.
Okay, awesome. Well, everybody, take heed. I mean, worst case scenario. I mean, I've always said, if you have the sink on, even if it's just running a little bit.
That usually will help.
I mean, that usually will do the job.
Hopefully tonight's the last night of this really bitter cold.
I think we're back into the summer next week.
Here's another tip. Days ago, a pipe freeze. It was running up an outside wall in a brick building built in the 1800s. So before you go and chop into the wall and figure, hey, I'm going to have to get these pipes unfroze, rip out the drywall, what we did was we had a gas heater in the unit. We turned it up to about 75. Then I took a space heater and put it right on the wall where I knew those pipes were. And in a period of about 5 hours, they thawed out completely.
Interesting.
So before you chop into your wall, try putting a little electric space heater and blow it right on the wall, about
but not a blowtorch.
2 feet away.
Don't put a blowtorch right to the wall?
Yeah, blowtorch is your last option.
Okay. That sounds like more fun, but so if we've got somebody that needs to get a hold of you to check, maybe they bought a home, they're not sure if their pipes are freezing or if they've got an issue, but they want you to come out as a home inspector and tell them, what options they may have at that point. What's the best number to call you on?
Sure. Best number is 717-233-6144.
And, of course, you are online at ebqharrisburg.com and, as always, Facebook. John, we appreciate you coming on. Stay warm.
Talk to you next week,
Thanks
buddy.
for having me.
Have a good one.
All right.
Wow.
No sound effects?
No. There's our recorded studio audience.
Primitive sound effects. You got to love it.
So that brings us up to acronyms. So we'll need to go.
Yeah, we can bust through these.
Okay, so APR.
Annual percentage rate. One of the most confusing terms for people buying a house. It's one of the very first things that they call you on if it's not explained up front, because in every loan package there's an APR disclosure, and it basically tells you the best way to explain
Well, here, I can tell them really quick. Here's what it is, folks. They take all the points and all the loan costs, they add it in with your points in that, and then they divide it out in the first year, and that's how they come up with the annual percentage rate. It's really not what your rate is. If Kingsley his bank gave you a 4% interest rate, you really are paying the 4%. But on that first annual APR, they put in all the costs and divide it out.
That didn't help any.
Call me after the show.
Mm-hmm.
An ARM. What's an ARM?
Adjustable rate mortgage, which we did kind of tackle.
We did.
Not widely used.
The rate floats. Right?
Yeah, used in commercial and people that are investors or people that have to move.
CCRs, that's covenants, conditions, and restrictions. That's where you're seeing those deed restrictions Kingsley was talking about earlier when we were discussing the deeds.
No chickens or roosters in your development. Yep.
Maybe a homeowners association. A CMA.
Competitive market analysis, which is a step below an appraisal.
Right.
If you've got a realtor that's experienced 20, 30 years and can flip through a CMA, a lot of times I would take that valuation over an appraisal, especially for quick value.
EMD. Your realtor may ask you for EMD, the earnest money deposit, and that's your escrow money. That's your good faith money. FHA, did you touch on it, FHA already?
Well, it's a government-backed loan, Federal Housing Administration, just one of those loans that's guaranteed by one of the government resources. That's not a conventional loan.
Now, where you live, you have an HOA.
I have an HOA. Yes, an HOA is just
which is a PITA.
Hell on association. It's basically all those restrictions and covenants are
enforced by the HOA.
Correct.
HUD, HUD. Housing and Urban Development, federal agency. IDX, that's Internet Data Exchange. So that gets confusing for the public. So you can go on to brokersrealty.com or homesearch.com or Search Homes in PA, and you're going to see all the different listings in a given area. But that real estate agent may not, or company may not actually have that property listed. But all the brokers participate and let them show those listings out there as a way to advertise. And so you may call XYZ Realty, but it's really a Century 21 listing or a Broker's Realty listing. It wasn't that company's listing.
Really, it's just the benefit to let people have access to live data.
Right.
That they normally didn't used to have.
And that's
Technology.
The same thing that happens on Zillow or Realtor.com. Just truly, you may call somebody expecting them to be the listing agent, but they aren't. They're just somebody that bought your name and number. The MLS
is what the IDX gives you access to.
Right.
Well, in essence, yes.
The multiple listing service, which is what the realtors use as their database of all the properties for sale. This one's back in Kingsley's court.
PITI, P-I-T-I is what they call it. Basically, is principal, interest, taxes, and insurance, which is really what makes up your total mortgage payment. Pretty simple. PMI. I'm going to go with 2 on this one. You've got an ugly, evil corporation in central Pennsylvania, or private mortgage insurance. I think we all know who that is. Or private mortgage insurance, which really is insurance required to protect the lender on loan against your default.
An REO. REO is real estate owned. That's when the bank's taken the property back and it's now real estate owned by the bank.
Not as many today as there were several years ago.
USDA, United States Department of Agriculture, they also underwrite loans as a government agency, just like FHA or the VA. VA,
Veterans, Department of Veterans Affairs, of course, for all of those that are eligible for a VA loan, that's really what VA would stand for.
And if you're a veteran out there, you should really be looking to take advantage
of a lot of
benefits.
The benefit really is there. Don't just take it because you're a VA. It really is a lot of benefits. Zero down, no mortgage insurance, usually very competitive rates, lower than your conventional. So take advantage of it, use it. So hopefully that helped everybody out here today, at least on a lot of the major terms and acronyms. Any questions, give us a call on terms if we missed them. Hit our Facebook page up, Real Estate Radio Guy.
Google brokersrealty.com or
pagoloan.com, or give us a call directly. Until next week, real individuals.
Real people.
Real questions.
Real answers.
Okay.
Till next week.
Thanks so much for listening to this episode of the Real Estate Radio Guys with John Rainville and Kingsley Harmer. For more great content and to stay up to date, visit pagoloan.com, brokersrealty.com, and facebook.com/Real Estate Radio Guy. If you enjoyed the episode, please rate and review, and we'll catch you next time on the Real Estate Radio Guys.
The greatest classic hits play on Oldies 102.9. WHYL Carlisle. You're listening to